Good afternoon. My name is Carolina Payor. I'm a Senior International Manager at the CISI, and I would like to welcome you to our live webcast on digital transformation in finance, disrupting and setting new industry norms. This webcast is hosted by our National Advisory Council in Cyprus. Before we start, I just wanted to let you know that we're going to hold short presentations from the panelists, followed by a panelist discussion, and there will be a Q&A session as well. So if you've got any questions, you can ask them in the Q&A section in Zoom. So without further ado, the next slide, please. So I will let our moderator introduce all of the panelists. So Emilios Tannousis, who is the Manager, Wealth Management, Global Corporate Banking and Markets at the Bank of Cyprus, who is also a committee member on the National Advisory Council in Cyprus. Welcome. Emilios, over to you. I will let you welcome everyone and introduce the panel. Thank you.
Thank you very much, Carolina. I think we are ready to start our afternoon discussion on the digital transformation and how this affects the financial services and the banking industry throughout Europe. Today we have our distinguished guests that I will introduce you in a while. First of all, I would like to thank you on behalf of CISI National Advisory Council in Cyprus. We're trying to give specialist and professional insight to our CPD members, not only for their CPDs, but also for the new era that we are now experiencing. Today, we have a very hot topic. We will tackle the cutting-edge developments in fintech, in change delivery, in banking reorganization and automation. And of course, it will be of great interest to our young professionals. Together with us today, we have 4 great speakers, in my opinion. First of all, we have Dr. George Theocharidis, Vice Chairman of the Cyprus Securities and Exchange Commission, who will give his keynote speech in a while. We have Connie Dorestein, founding partner of Bank EFI. We have George Georgis, Chief Information Officer at Bank of Cyprus and a management consultant in KPMG. And of course, our dear friend Pedro Pinto Coelho, Chairman of the AFIP, FinTech and InsurTech Portugal, and former Chairman of Pango BNI Europa. Without any further delays, I will call our dear friend George Theocharidis, member of CISI and Vice Chairman of the Cyprus Securities and Exchange Commission, to give his keynote speech on this discussion. George, the floor is yours.
Thank you, Emilia. Good afternoon to all. I would like first to thank the CISI Cyprus, which, as Emilios mentioned, I'm a proud member, and especially Carolina Payor and Emilios Tannousis for the kind invitation to participate in this live webcast and the discussion on the very important and interesting theme of digital transformation. As part of its mandate, CISEC actively supports new fintech-based products, services, and infrastructure projects, particularly those that can contribute to the financing of the real economy. In addition, through our Innovation Hub, CISEC actively supports firms and entrepreneurs who are developing greener fintech solutions to automate and enhance the analytical capabilities of firms to handle ESG or environmental social governance information. So to ensure that we have the relevant systems and processes in place to meet these new technologies, our efforts are also focused on modernizing CISEC and the continuous upgrade and simplification of CISEC's operations and procedures remains a priority, and our vision is to turn Cyprus into and CySEC into one of Europe's safest, most reliable and attractive investment destinations. I'll talk briefly now a little bit about the Innovation Hub and what is this Innovation Hub. We established this Innovation Hub back in 2018 to explore the growth and use of fintech and regtech or subtech in Cyprus financial markets. This Innovation Hub serves as a knowledge sharing platform for both the supervised and the non-supervised entities to enhance the understanding about new and evolving financial technologies. It allows for the easy transfer of information around how existing regulation applies to new products or business models, while also facilitating the identification of regulatory frameworks and licensing requirements that might need to be established in order to meet evolving needs and ultimately ensure the safety and protection of investors. Ideally, we want to see new innovative products or services before they are launched on the market to see how these respond to existing regulation in order to protect investors. So the Innovation Hub up to now has engaged and consulted with a number of entities, several entities, in relation to specific products or business models with a wide range of interest in innovation. And currently we're looking into the possibility of transforming this Innovation Hub into a regulatory sandbox. And for that, I should mention that we've applied for financing through the RRF, the Recovery and Resilience Fund of the European Union, which part of its mandate is to empower and finance digital transformation. So we're hoping that this Innovation Hub will extend and will become into a regulatory sandbox soon, similar to what the FCA has in the UK. So through the sandbox, innovative products or services will be rolled out in a controlled environment on a trial basis and with a limited scale. So our approach to innovation reflects the government's broader strategy to encourage financial innovation, and this is being achieved through the Ministry of Innovation. We look forward to collaborating with the ministry to create a robust ecosystem in which fintech firms can flourish and grow responsibly in Cyprus. Now I'll talk a little bit about the hot area of crypto assets and the DLT. So while we're committed to encouraging financial innovation, it's also very imperative or very important that we balance the adoption of new technologies against the threats that are inherent in some forms of innovation and the risks that they can pose to all market participants. One example, obviously, are the crypto assets or the virtual assets. We are keen to understand the potential of blockchain technology or DLT, distributed ledger technology, but we also need to understand the risks of the crypto assets themselves. So the extreme volatility in the price of crypto assets we have witnessed over the last few years, it certainly constitutes a significant risk to investors. Money laundering, hacking, operational weaknesses of crypto exchanges themselves are other risks that must be taken seriously. CySEC, I should mention, it represents the Republic of Cyprus in the discussions that take place at the European level, and in particular in the European Council, on the establishment of an institutional framework in relation to the regulation of the cryptocurrency services. And I'm sure that you have heard of the MiCA, or the Markets in Crypto Assets, a directive that will be hopefully passed through the EU and launched in all the member states in a few years. So in addition to MiCA, in the context of compliance with international standards of the Financial Action Task Force, during 2020, the government assigned an external consultant to conduct a national risk assessment of crypto asset and service providers in relation to money laundering and terrorist financing. CySEC participated in this evaluation as a stakeholder due to the imminent start of the supervision of providers within the year. So in terms of that, I should mention that since the passage of the law for the transposition of the 5th AML directive through the Cypriot Parliament, we will soon issuing a directive for the registry of the crypto or virtual asset service providers and the application forms. So we will start the registration of those, hopefully by the beginning of the summer. And we will be looking at this point in time, things such as the fit and probity of directors, governance of the entity, corporate capital requirements, issues about cyber risk, and we will be supervising for AML purposes. So this is the plan that we have ahead of us in terms of the virtual assets until MiCA is established in a few years' time. To mention a few things about the supervision that we apply at SciSec. In 2015, we have developed a comprehensive risk-based supervisory framework, the RBSF as we call it, designed to enhance the way we supervise the securities industry in Cyprus. This informs our approach to supervision, the way we assess the risk a firm and its activities pose to investor protection. So we are looking at key pillars such as AML, prudential risks, conduct of business, and governance in order to rank firms according to the risks they pose to investors. Our priority is to ensure full compliance with the legislation we have in place to protect investors. This framework allows us to determine the compliance requirements for each firm so that we can categorize under supervision these entities according to their risk profile and measure their impact on the smooth functioning of the market. So based on the evaluation of the risks determined by the RBSF, we conduct on-site and off-site inspections to assess and evaluate the compliance of supervised entities to ensure they uphold their obligations to adapt and implement appropriate policies, systems, and procedures to combat money laundering. Our inspections are thematic or can involve a full audit depending on the subject and extent of the inspection requirements. As we look forward, SciSec's main goal in 2021 is to develop procedures and methodologies to conduct data-driven supervision as well, which will allow you to identify any irregularities and risks in the market at an early stage. And a few things about modernization of SciSec. Recently, we launched two very important projects in 2020. It includes the creation of a data governance framework that underpins the Commission's huge database, and the launch also of an improved system for the timely identification, proper assessment, and management of potential dangers and risks that are connected with the operation of the Commission itself, what we call the ERM, or the Enterprise Risk Management Framework. Both projects are expected to be finalized in the second quarter of 2021. Moreover, in addition to the Cyprus investment firms, we have extended the option to digitally submit company data to funds, fund managers, and an extension also to the ASPs, administrative service providers, is also under review. SciSec is also moving ahead with the creation of an electronic platform that will allow the digital submission of all applications, starting with licensing applications for collective investment funds, so that we can streamline the application process. Concluding, financial technology provides enormous opportunities for businesses to increase transparency, reduce costs, and make information more accessible to consumers. We are fully committed at SciSec to support these existing developments, whilst also being fully prepared to ensure that DLT applications are delivered in a prudent and compliant manner and that investors are protected. So in this rapidly changing world, we're also continue to contribute at the national, at the EU, and also at the global level, as we are part of IOSCO, and we're part of ESMA at the EU level, to give Cyprus a strong voice, and we do this through our continued participation at various decision-making and discussion forums. It has been a pleasure in sharing SciSec's progress with you in terms of this area and to contribute to this discussion, and thank you very much for your attention.
Thank you very much, George, for your enlightening insights of how SciSec is approaching the new developments on the digital transformation, both on the as regards the entities, as regards regulation, but also the assets themselves that we all need to be aware of where and how to invest. Thank you very much for joining us in this event. So now we're proceeding to our second guest speaker, This is Connie Dorestein. Connie is a founding partner at the Bank EFI. I will just pick up 1-2 lines from her CV that they are really exciting, and I believe she will give us insight on her experience. So Connie, she has been worked in the international financial technology industry in various roles, but especially on the Clear to Pay and FIS. She's an advisory board member to Holland FinTech and Advise Robo. She's a non-executive board member at Arch Capital and Blanco Services, and of course associated in the Digital Insurance Agenda and Blockchain Innovation Conference in 2019. And something that I have picked up, she has passion on generations of Y and Z. That means that Connie will give us really what the young generations are, how the young generations are approaching digital transformation. So Connie, the floor is yours. Please enlighten us with your feedback.
Well, thank you very much, Emilios, for this glowing introduction, I have to say, and thank you all at CISI, friends from a long past when I worked in the city in London. So I'm always extremely happy to make a contribution. So without further ado, what we agreed when we were talking about this afternoon is that I would sort of start to hover a bit higher on the topic of digital transformation with all of these key, very detailed content experts on board in your particular markets and in your particular segment. So I'm going to hover a little bit higher and take you through probably some more thinking reflections. Yes, I do come from the corporate banking technology side, but I'm also chairman of an asset management as a service company. So I understand the security side of the business a bit as well. Can I have the next one? Because I have a wonderful assistance here in the background. So the first thing I want to make is that whenever people talk about digital transformation, they always dive into the specifics of the technology aspects. And the problem we all face now, and I see it when we look at open banking, is that a lot of companies have gone around digitization in saying, okay, what we used to do, multi-channel banking, we're now going to do on the internet. And that is incorrect, because all we do then is heap cost on cost on cost and make the same mistakes we've always made. So as I always say, if we talk about digital transformation, it is all about reading this beautiful German word, that Zeitgeist. Read the signs of the times, and it has to do with society, with the economy, with generations, with developments, with technology. You have to live and read what's playing around you. Secondly, it's all about relevance. So whenever people talk to you about, oh, I want the ultimate customer experience. Well, in all fairness, in finance, the ultimate customer experience is either no experience, it just happens, or a relevant one. At the right moment in time, at the right place, which is increasingly online, you understand what my need is. And because you amalgamate all this data, you come with a relevant offer. And that is much better than a great experience. I hope for all of you that you have lots of friends and family members who give you great experiences. And it's about collaboration. And again, this is a much abused word, partnership. But I see in open banking around me, and we as a company work with banks and we work with other trusted third parties, TTPs, that this whole idea of a partnership only works when you're level playing field partners. And in general, you're not. The bank is, in general, still today, a bank or a business securities firm has the power, and a smaller company that they want to collaborate with doesn't have that. And in such, you really have to talk about collaboration and not so much partnership. We'll come to that. And so what I would say is, if I say banks, it doesn't really matter whether I say banks or asset management firms or securities houses. To a large degree, you still have the customer's trust. I mean, every research bit sort of evidences it. But as to Emilios's point, I also look at the next generations. It is a market to retain, and I'm putting it nicely now, but it really is a market not to lose for the incumbent players before we can start looking at gaining market share and traction. And so what I would want to do with you this afternoon is take three main areas that I think you need to be at least very aware of, if not wary. So can I have the next one? So the first one is, people always talk about, even Jamie Dimon did it, and I didn't understand it at all. He said, fintech is our biggest threat. Fintech is not your threat. Fintech are the new players who try new stuff, who work totally regulated, who will have to go out every few months to raise more money to keep their roadmaps flowing, who have to spend a lot of money in attracting customers, unless they work with a bank like we at Bankify do, then we don't have to do that. Big tech is the threat that people should look out for. Because the big tech, and I took a slide from McKinsey because then we all know it's true. If you look at what the Apples, the Tencents, the Googles, the Microsofts can do, they have not only a massively higher valuation than the top 200 largest banks combined, and they have very, very large cash positions, which they don't have to set aside for regulatory purposes. Their power is massive. Now, we all know that capitalizations and valuations can change overnight. But they are very, very far ahead. And they play in a different game. And even this morning, I read a paper on Jeff Bezos's plans in the financial services marketplace. And he's very smart. He says, I will do anything and I'll steer clear from the current account, because that means that I stay out of the regulation. So the big tech companies, although they will work together with the large financial services firms, if they do start working with you, make sure whether you're a bank or an insurer or a pension fund, they will get the profitable business and you will become the plumber. So big tech invests more heavily and with more skill in new technologies. They simply attract the talent, the war for talent in the market. If you're a data scientist, do you want to work for Google or for a bank? I think you know the answer. And they are less distracted by regulation. Big tech also, we talked earlier about collaboration. They have it in their DNA because they constantly acquire companies, work and partner with others. And many of the open banking projects are now falling foul of the culture element. Banks find it very hard to collaborate. Big tech is losing its trust. We're not in the same giddy spheres as we were 3 years ago, because we've all seen, and this is what I meant by read the zeitgeist. We've all seen how people have become disgruntled and cynical about how big tech is using the data that is theirs. The issue is, you and I, and we talk about it, when I talk to my son who's 26 and all his mates, they don't worry so much about who owns their data, as long as they bring relevance. It's a very different perception of trust and data privacy. So they attract the new generation. So they are attracting the generation to come. They're not servicing a dying generation. And big tech is used to speed. This is an incredibly important one. Speed is a very different word in a bank than in a big tech. Does this mean I'm negative? No, not at all. And that's my whole point. If I can get the next slide. I see a great opportunity for the incumbent players in the financial services scene, whether you're an insurance company, a bank, an asset management firm. But what you should do is see the fintech, the new, more niche players and the trusted third parties. You should not sort of see them as partners because they're too small and they don't really know how it works, but view them as a customer segment. Because every time you view people as a customer segment, you are good at onboarding them. You are good at giving them service. You are good at dealing with them. So mindset, change your mindset, treat them as a customer, and they will bring footfall and production and volume to your doorstep. The second thing I would love you to think about is, can I have the next slide? It's a point I would put on your boardroom agenda. Is open banking demystified? And whether you're, and you can say, well, we're in asset management or not in open banking. Again, it's a zeitgeist thing, the whole collaboration around the sharing of data, whether it's regulated or not. In the UK, we call it open banking. In Europe, we call it PSD2, but it also happens in America. It also happens in Singapore. It's a societal development. And the bank case as we sort of like to think in 1980s terminology of where's the business case, the bank case, has been very difficult. And that has been due largely to the fact that what I talked about earlier is that most of the banks, and that is not their fault, have had to make huge investments on the technology side, on the opening up on the APIs. It's big spaghetti junctions through years of acquisitions, so very hard for them to do. But they made no choices. So they did what they did wrong in the 80s and in the 90s and in 2000, multi-channel for every product, for every customer, on every device, on every channel. And all you do is heap cost on cost on cost, and you're not increasing your income. And top that with low interest rates and very little fee-based income. And you see that if as a bank you're now not making choices, you're on the race to zero, because the big techs will take the customer relationship and they will turn you into the dumb pipe. And so I think that we should start thinking about embedded banking. And this is really where you bring your product in the channel of your customer. So think about, as you're a corporate bank, don't try to attract your corporate customers to your corporate banking channel and the 15 other banks that they have to work with, but go and sit in their ERP system. And you can think about around similar things. We now see, this is something we do as a company, we, rather than trying to bring small business owners into the business bank, we put the bank into their accounting package. So this embedded banking is a very good way forward, and you can offer it in a variety of forms, you know, white label in that channel or as an app. For the sake of time, I'm not going too much into this. So again, open banking, open anything will be the norm. Think about the model you choose, and most importantly, make choices. So get out of this giddy thing where banks started talking nonsense like we're not a bank, we're a technology house. They're not. A bank is a house of trust. All of you guys are houses of trust. So can I have the next one, please, for the conclusion around this second point? Bring the bank into the customer's world rather than the customer to your bank, because that's what the others will try to do. So go where the customer is already. And this is a joke I made, hang up the sneakers that you didn't look right on you anyway. The amount of bankers on sneakers I've seen over the last years that looked silly. I wanted to make this pun. Can I have the next one, my last talking point? And George was already relating to this. And I understand, George, where you're coming from, because you're on the regulatory side and you've got to sort of work on this on a day-to-day basis. But I wanted to take sort of one step back. People say to me, well, do you believe in this blockchain stuff? Or do you believe in the Bitcoin? It's irrelevant. It's here. It doesn't matter whether you believe or not. It is here, and it's here to stay. And they're marching on. And the one thing I would say is, don't feel stupid, because we all feel stupid. If you say, I don't really understand how it works. I don't really understand how crypto blockchain works. Everybody thinks they understand the internet. Hardly anybody understands the TCP/IP protocol. So this, where we are at this moment in time, is internet before we had a browser. So the smart people on the sort of communication side, on the technology side, they saw the upside of the opportunities of internet when nobody else did. So consequently, it was a high risk market at the time in sort of 1998, with also a very high yield market. It's exactly the same now with crypto and blockchain. So don't worry too much that it is a very high risk market, because people have to understand and realize it is a high risk market. And it will go through the same trend as everything with internet. First, we have the techno hoodies who sort of sit behind a desk and just coding. Then you get the speculators who think they can make a quick buck. This is sort of where we are now. Then, of course, the crooks heap onto this because they think, oh, wow, this is a beautiful way to surpass everything. And then we go to here to stay. Again, what I would say is focus on the real core element here. And that, again, that's the zeitgeist, the Web 3.0, the radical decentralization that people are almost longing for. And then you can say, well, you know, but why would people want that? They trust in the system. Well, yeah, we say we trust in the system, but if I talk to the younger generation, they say, do you guys think you can honestly just continue to print currency and let us, you know, stick behind with all that debt? of meaningless printed money. And we can say we believe in we trust in the system, but yesterday I checked it out for this presentation. Last year, if you just look at the institutions that are sort of the fines larger than $100,000, financial companies paid $3,000 billion in fines. And we sort of appreciate that in general, we catch 10%. So yeah, we can say we can trust the system, but how robust is the system? Young people are asking the question, and they're very, I think they're very honest, and they're very, how would you say that? It is a fair thing that they ask us that question. So we must not deride it away and say, let's stick to the current system because it's so marvelous. Global banks, fund managers, everybody's picking it up. We see, and in general, it is about participation. And I would encourage people to look at it, because if you're not participating, even small format, you are not taking part, you're not influencing. And if you look, for instance, at the whole way investing in blockchain companies, it's very different from regular private equity and the exit model in those sort of investments. You know, just start playing with a small stake so that you can understand what is happening. And again, we need to ask the question, do we want to be the rabbit or the hunter? Because certain forces in the world are not being held back by whatever we say. We can all regulate what we want. We cannot stop progression. We cannot stop political players to turn on the power and use technology for their own benefit. So what I would say is, you know, be sure to be informed, because ultimately, don't focus too much on cryptocurrencies. This whole Web 3.0 decentralization is around equal access to funds, which we can make much easier for all our benefit, having an identity that travels across financial products and services, and having autonomy and ownership without people being able to steal it from you. So my final thought for my presentation is this. Next slide, please. And final, if nothing else, start getting informed and talk with your team around the ethics of Web 3.0, decentralization, and discuss what does a new world order with no rules, what could it mean for us and for our industry? Thank you.
Thank you very much, Connie, for your very interesting points on how we should change our mindset, I guess, in the industries. Just a quick question. Should banks see these developments as threats, or can you please elaborate more on what you said before, that we have to make things relevant to our customers and maybe collaborate with technology companies or fintech companies? Because you said something about the mindset that we need.
Yeah.
We have to change our mindset. Can you please elaborate more on this?
Yes, I will. And this is not boastingly meant, but over the last 3 years, I've spoken with over 75 banks in Europe on this whole particular effort. And people say to me, if you start another company, you know, why wouldn't you go direct and become a challenger player? And I say for two very good reasons. First, you should never squander your investors' money on trying to do marketing in a red ocean of customers. And secondly, more importantly, banks still have the trust. And as much as I believe in rapid developments, I know from experience that trust is a human sentiment. And so it goes on horseback and it comes by foot. And I think that banks and anything regulated will continue to be trusted much, much more than big techs for important financial decisions. People very easily take a current account for payments to, you know, a big data provider. But if you talk about your savings, your pension, assets, securities, a mortgage, you really want to work with a heavily regulated partner. And of course, we've seen very good times, and then people all flock to new instruments and want to try everything. COVID has shown us, and you know, if we get, God forbid, another major crisis, people will run back to the regulated industry. it's a matter of time. And I think what banks need to do and asset management houses need to do in this sort of what I feel just need to be a 5-year gap is make choices. Because if you're relevant for a segment, you can be the one pilot screen where people come and get the total overview of all their assets. So if a bank would work together with a good securities house and say, well, why don't we, collaborate, because this particular customer, let's say an independent business owner or somebody who sold his business, who's in the private banking arm, he likes to have one overview. And if we collaborate, I can pull in the data from you. But if that person is retired and is much more busy with his investments than with payments, the bank should be willing to sort of place their data in the portal of the investment manager. And I think that is all, 5-10 years ago, that simply wasn't possible in terms of the technology. Technology-wise, we can now do that. I think banks need to get rid of the idea they need to be all for everything and everybody and make choices. And if they talk collaboration, they've got to be willing to invest and play and see what works, rather than say, what is your 5-year lookout and what is your waterfall project implementation plan? And I think all incumbent players should much more collaborate. I think we have PSD2, we have Know Your Customer. I really think PSD3 or Open Banking Next should be, if one established financial institution has done a KYC and knows who I am, I should be able to passport that to other organizations, because that is the best way to catch a crook.
Thank you, Connie. Thank you very, very much. We are proceeding now to host our next guest speaker, Mr. George Georgis, Chief Information Officer at Bank of Cyprus and a management consultant at KPMG. George has a very long experience in management consulting projects as regards information technology transformation and of course change delivery. He's been working with Bank of Cyprus for the last 3 years as regards having the big project of the digital transformation of the bank. He has a lot of experience. I guess everyone can elaborate on George's CV, but most importantly, he is part of important associations in Cyprus and abroad that has to do with blockchain, digital transformation, and change delivery. George, please give us your insights and how Bank of Cyprus and generally the banking system in Cyprus is approaching the digital transformation.
Thank you, Emilie, and thank you for the introduction. Actually, I'm going to speak about how the Bank of Cyprus is approaching it and how I think the banks should be approaching it, especially in a small economy like ours. I actually decided to change a bit the way I'm going to speak because I want to use a lot of what Connie said to relate to the reality. And really thank you, because I actually took notes. I'm looking at my phone and I'm going to use some of the information that you said and tell you how we have translated that and how we're doing it in practical terms, because I fully 100% agree with you. So let's proceed with the first slide. So basically, I wanted to start by highlighting to everybody the difference between digital transformation and what we call digital economy. Connie said that the banks have the trust of the client and we have the client base, and that's absolutely true. The question now is, how do we use that? What do we need to do? And again, we saw in the previous presentation that we have to make the service relevant. We don't have to wait for the client to come to us. I fully agree, it doesn't work like that anyway. Actually, trying to get the client to come to you, it's putting a lot of effort with limited return. So we have to go where the client is, and we have to collaborate with others in the economy to make this happen. And we call that the digital economy. So we see the bank in the middle of this digital economy, where we are automating, or we're helping to automating, or we are collaborating with fintechs and other stakeholders to get all of the economic processes, transactions, interactions, and activities to link. And when the customer, the client, or the potential client is actually participating in an activity in the economy, the bank has to be right there. And if the bank is right there and offers a relevant service, then that's how you will increase your client base, and that's how you will provide a relevant service. So continue to the next slide. So here I've selected a few of the statements by a bunch of relevant CEOs, CFOs, and industry leaders, and you can continue to bring everything on the screen. And basically, I highlighted a few to link to what we were saying right now. We are moving to an economy where everything will be service-based, not product-based. Now the banks are structured based on products, you know, what type of loans you offer, not how you offer the loan. There's CEOs that say that future CEOs will have to recognize that they're managing services and not structures. The organizational structure will start becoming irrelevant. How we manage the service will be important. Then we have somebody else, the chief commercial officer at Hitachi, saying wider collaboration and connected ecosystems are the future. Exactly what we're saying here. We have to collaborate, and we have to get together, and we have to get to the client and not wait for the client to come to us. And the last one on the right at the bottom, huge issues need to be fixed. And I do agree, because the rate of evolution of technology has outpaced everything, has outpaced the regulators, has outpaced the organizations. So now we have this tangible technology, but we have to fix everything around it. So it has to be, the statement there from the CEO says it has to be a global effort. I agree. And when we talk about Cyprus, I say it has to be a national effort. So next slide. This here is a depiction of what we call the digital economy. And this is where you also see the different fintechs and the merchants. Please continue for the whole slide. And the merchants and the consumers and the authority registers and the trust services, the payment service providers, and the banks. And then on the left, we have the stakeholders, different service providers, government entities, regulators, and in the middle, a bunch of different services that we can offer to the customer by being where the customer needs us to be at any given time. We are saying that the next step and the game changer is for the banks to be talking digital economy, not digital transformation. Digital transformation is basically traditional now, it's the past. So this is where we are saying that we have to get out and collaborate with the fintechs. This is where you said something, Connie, before. You said we have to co-brand. We fully agree on that. We actually have projects that we're starting to co-brand services. We have to think about embedded banking. When somebody wants to buy a property, I don't have to wait for him to need the loan after he has done everything and gone to all the government entities and then come to me and say, can I have a loan? I have to be there when he's thinking that the property is necessary. So that's what we're doing. And something that excited me very much, you said that we have to sit in the ERPs of our clients. Again, we fully agree with that. We started cooperating with the vendors and the clients, so our banking service extends to the client systems. Next slide, please. So what needs to be done? What I said, it's our initiatives and our desire, but as I said before, there's significant issues to fix. And some recommendations towards the industry, and a bit focused, more focused to Cyprus, of course. If we start with number one, we need supportive and confident regulation. I have a reputation in Cyprus that I complain a lot about the regulators, not about CySEC specifically, to be honest, but more the banking related regulators, because I want to collaborate. I want to collaborate with a fintech and, you know, get a service that I white label. That's immediately labeled as critical outsourcing. It's 3 to 6 months to get an approval and a bunch of bureaucratic processes. This needs to change. We want to be regulated exactly for the reasons that Connie said before, but it has to be efficient, it has to be intelligent, it has to be risk-based, and it has to be fast. Number two, skills and competencies. We have to repatriate in Cyprus skilled workforce. There's a bunch of Cypriots abroad that work for different fintechs, different banks. We have to try and bring as many of them back. And as Connie said before, we have to get the people that wear the sneakers and look good to work with us. Okay, and that's possible, and it can change. Item 3, digital first public-private alliance. We have to cooperate with the government. A lot of the services, a lot of the digital economy processes pass from a government entity or department. We have to collaborate there, and the private sector can help the government move faster. And we have actually started to do that. Item 4, leverage and share. In a small economy like ours, when somebody is doing something well, we have to share, we have to use it, we have to support it. Not each bank or each organization has to replicate everything. It's a small economy, it's a small market. We have to leverage what we have, and we have to share it so we can all faster move towards the digital economy. At the same time, we can specialize and grow. We can build international ecosystems. If we have some specialized services that don't exist somewhere else, through supportive regulation, through sharing, through onboarding good skills and competencies, we can also export that. And we have seen that Cyprus doing it in the past, but now we can do it in this industry also. And item 6, it has to be a national effort. It's not just the banks that need to do work. We have to do it together. If each bank in Cyprus is trying to do it individually, we will waste money. We will create broken economy processes, and we will not reach the full potential that we can have. And the oxymoron is that the size of our economy makes it easier because we're small. If we are small and we cooperate, the coverage is huge. So my message is, following Connie's presentation also, is that I fully agree we have to be where the client is. We have to be relevant. The services have to extend to what we call the digital economy, not just banking services, under smart and intelligent and fast regulation. There's no other way around it. And I think the previous presentation summarized why. Thank you.
Thank you, George. Thank you very much for your insights. Being in a bank that it's actually the largest financial institution in Cyprus, how this places the challenges of this digital transformation / economy as regards its own stakeholders. It's not only the shareholders, it's the customers, it's all the market participants, especially in the sense that as an island, sometimes we may lag behind in being in front of the developments. I mean, we are waiting, maybe sometimes we are waiting for other countries to see their initiatives and then try to expand on it. How is Bank of Cyprus approaching this challenge? Are you using consultants? How are you doing it?
Emilia, thank you for the question. What I presented now is not conceptual. The bank has actually started to work on this. And we have started to work on this by establishing a dedicated team focusing on establishing digital economy services. It's still within the bank's, let's say, controls and somehow structures, using some consultants, not exclusively outsourcing everything. But the key point, being a legacy bank, is that you have to focus. So we have created this focused initiative to split this new digital economy initiative from running the bank and running all of the regulation requirements and compliance and all that, as you know very well, takes a lot of time. The positive thing is that there has been a very, very good and positive reaction from the economy stakeholders. And also the fact that the bank has this size and this client base makes actually implementing this vision much easier. Once, if 50 or 60% of the market is your clients, it's easier to reach out to them, to cooperate, to collaborate. So we have a specific initiative, we have a specific program, we have specific resources, we have the support of the board, whom we greatly thank. And we hope that we're going to go towards that direction where the bank will be a key orchestrator of the digital economy, but not that we don't want to dominate. We don't want to be the technology house, like Connie said before. We want to collaborate and make it happen.
Thank you. Thank you, George, very much.
Thank you.
Let's proceed now with our next guest, Pedro Pinto Coelho. He's a chairman of the AFIP, FinTech and InsurTech Portugal, a former chairman of Banco BNI Europa. Pedro has also a lot of experience, more than 25 years in the international financial services, leading blue chip institutions across the globe. He has a value proposition on the FinTech initiative, especially in creating financial products towards that direction. He's an expert in digital banking transformation. So Pedro, the floor is yours. Please enlighten us with your ideas.
Emilius, thank you very much for the introduction. It's a pleasure to be here. And needless to say that some of the things I'm going to say, it's already been said. So being the last one, it's always a tricky situation, but I hope I can add as much value as possible. I'll try to share my screen now because I think it would be useful to deliver a presentation. Let me see if you can see the presentation now.
Yes.
Yes, right. Okay, very good. So some of the aspects that have been said, I think will be somehow repeated, but I think we're all in agreement that we are talking now about the new environment and what I call the next new normal and the evolving banking landscape. So we're all in agreement that financial institutions are considered by its clients the safest, the safe haven, or I would say the safe posts where clients deposit their money. But the whole model is being questioned. So I would now move, let me see here, to the next page. So I would start by saying that the universal banking model, as you know, it's been a model that has existed for a very long time, not only in Cyprus, but in every single country. There are banks which we have kept an account with that try to provide every single service from retail to SMEs to large corporates. And we see that this universal banking model is being threatened, and this acceleration has increased now with the issue of pandemic and the COVID-19, as people now basically have to deal with financial institutions in a remote way. So I would say, first of all, it's almost impossible for any bank to compete in every segment and be excellent at every single segment. So that's something we have to really consider. The other aspect is that the traditional current account is no longer the anchor for the client. The client can have a current account with a bank and do business with other banks. So the role of the bank as a savings banks, particularly now with the very low, if not negative interest rates, has also eroded a bit the role of the bank as the savings, as keeping the savings for the client, as the client is looking for a yield, and the typical term deposit is not the answer. Again, the other aspect are the credit products. Origination now has been somehow put into question because banks, not only because of regulation, but also because of different networks of brokers and comparison sites, see that origination must be done simultaneously, not only directly, but indirectly. And we see more and more in different markets, the position of the brokers increasing, and obviously the banks have to compete side by side with other propositions. And we even see non-banks competing in certain areas of the credit products. And customers being price sensitive, they will become less and less loyal to the relationship bank. And also depending on the jurisdiction, you see that you have players like insurance companies, for instance, in the UK or in Holland, providing mortgage products without being a bank. They have an origination platform they cooperate with, they have a servicer entity, a servicing entity, and then they have the loan on their books. So they effectively don't need a bank, and they have a lower cost of capital than a bank. Now, moving on to the next slide, we see that the fintech cycle is interesting because in the middle 2014, 15, we saw this big boom and fintechs considering that they would be conquering banks, but this has shifted substantially. Now we see more and more banks not necessarily being threatened, but trying to cooperate with fintechs and vice versa. So the first cycle of disruption on confrontation, I think, is already gone. We saw this initial cooperation starting with banks, and the third phase is basically understanding that you have to really be careful in the way you partner with this type of entities, because these entities are startups. They are typically not regulated. Banks are regulated, and they have legacy issues, whether it's from a technology or a human perspective. And you really have to find a way to really embed innovation without slowing down the pace of innovation. So new generation banks have no legacy, but we think the incumbent banks also have to live somehow in this balance between innovation and trying to comply with the regulation and with existing processes. So I would say there will be more and more cooperation, there will be more consolidation, and these neobanks or digital banks, we see that most likely they will probably become new entities or merge with existing entities, and there will be legacy issues that we have to deal with in the future. Because on one hand, you have these new banks that have no clients, that are trying to gather clients. On the other hand, you have incumbent banks that have existing client base that it's worth quite a bit. Now, coming back to the fintech ecosystem, one thing that we really see is now that banks used to rely on the IT departments to deal with suppliers, with vendors, to create solutions adjusted to their needs. Now, we no longer rely exclusively on an IT department. So there should be an innovation department associated with the IT, obviously, that really looks at the fintech ecosystem as a whole, because it is developing fast and in a global way. There might be some regional clusters that are stronger than others, depending on the size of the market, but effectively, we have fintech companies that typically they can offer from a single technology component to a full stack of products or services. And depending on the case, you may want a partner from a technology or a business perspective. And the number of verticals also has grown fast and has deepened. So we're talking about RegTech, payments, investment apps like robo-advisory apps, big data and analytics, blockchain technology, direct lending, personal finance, PFM. So there is a huge, and banks can get really confused on what to use by when, and they have to really be updated all the time about this new world without being left behind. Because if you start copying some solutions that are already in the market, by the time you reach that level of sophistication where you copied something else is coming to the market, and then you are again behind the curve. Now, in terms of just examples, these are just a few examples that I'm sure banks in Cyprus and elsewhere have already considered adopting. Client onboarding, biometrics. It doesn't make sense for a bank to develop it on its own. There are hundreds of companies that can provide this, and things are evolving fast, and obviously they have to adjust according to the regulation in each country. KYC and AML platforms, we see compliance teams growing very fast, and humans cannot really cope with the amount of information that compliance needs to monitor. So artificial intelligence here plays a role, and very sophisticated platforms help banks dealing with this flow of transactions to guarantee that you have a seamless approach and you really are able to pinpoint where the problems or the alerts may be. Payment platforms, FX platforms, we see again niche players being more competitive than the banks on the remittances play, and we see now players like TransferWise partnering with banks because they know that they can offer a better product than they have themselves. Robo-advisors, as I mentioned before, simplify the way of investing and doing passive investor for investor at a fraction of the cost of private banks. Credit scoring, benefiting from larger amounts of data, which the bank can benefit. Servicing or NPL management is another area, and origination platforms are others that are becoming more and more sophisticated. Then, in terms of differentiation, as we said, if the universal banking model is dead, then we really need to think hard how banks can differentiate themselves. And obviously, the smaller the market is, the more important this may be, because you need to go beyond borders, hopefully in the European Union, to really come out with a strategy where you can eventually offer a service or a product or a set of services or products that can really help any client anywhere, and the strategy in each geography might be different due to the cultural differences. And we also see that the full online world, it's not enough for the client. So the online and the offline need to merge, and banks will have a role there because they are used to do much more offline than they used to do digitally, and now they are moving completely the pendulum to the online world. But I would say the balance is the key, because in certain segments you may need to do something offline, in other segments you may be able to do it fully digital. But depending on what you're selling, you really need to guarantee that those channels are used to the benefit of the client. And then finally, what could be as a benefit for the banks? To partner with businesses, and as we have said here before, to verticalize the business and be the engine of the financial services in a particular industry. Here I'm just giving some examples like retailers, airlines, automotive industries. So we find more and more examples, and the regulators also need to understand this, because sometimes it's a bit hard where the regulation starts and where it stops. We see elsewhere around in Southeast Asia, for instance, apps like Grab, a taxi app, being embedded into financial services. And I think in Europe, we will soon see more and more of this happening, and we need to guarantee that the regulated part of the business is under the banking umbrella and the non-regulated is under the industry part. So I think that is quite relevant. Then finally, I would say that we need to leverage these technologies. Banks need to change their mindset and reorganize themselves to benefit from this wave of innovation and digitalization. They should not forget the middle and back office. That's key in order to guarantee a full-fledged, efficient bank. And as we've said here, open banking has to be embraced, and we have to understand that just closing ourselves will not help. So it will help us providing a service and benefiting from the information the client has on other banks, and we can retrieve that information for the benefit of the client and being able to provide something different. So the other aspect is the consumer experience. So the client is more and more demanding, is used to experiences in Amazon, in Uber, in other apps, and is expecting sometimes the type of service that is used to in other segments to be the same on the banking, and banking is evolving in that way. So as a key takeaways, I would say let's embrace technology and fintech, as it has been said here, and let's be open-minded and be agile and flexible is a must. So it is easier said than done, but we have a rigidity of a core banking system. Most of the banks do have that, and now they have to completely move to a much more flexible architecture that allows them to play like a Lego, put an additional piece in the puzzle and take another one. So I think it's quite relevant that they find this flexibility so they adjust to the new challenges and ultimately be customer-centric and try to provide what clients really want and not what banks really want to sell, but what clients may want to bring from the banks. So that's what I have to say. Yeah. Thank you very much for listening.
Thank you.
I hope I wasn't too long.
Thank you, Pedro. Thank you. Very good insights of your experience, how banks have to evolve in the future. Just one last question before we end up the session, because we are running out of time. Pedro, do you think how quickly can banks adjust into this environment? Just 30 seconds, if you can.
Yes, I would say this is a challenge because, as we know, the bigger the bank and the older the bank, the more legacy it has. So I would say it will take probably a decade or more to have the banks changing completely their culture and their technology platforms. Some of them are quicker than others. Some of them have actually separated so that they create a new platform. But ultimately, you will see that it will end up merging again in the future. So we really have to create a new mindset to allow banks to accelerate this pace of innovation. But legacy will resist this change, but I think it will take at least 1 or 2 decades.
Thank you, Pedro. Thank you. As we're running out of time, I would just say 2 important words of how we shall deal with the new challenges. It's actually not challenges, but are maybe opportunities that we all have to grasp. So I want to thank you all our guest speakers, Giorgio Haridis, Connie Dorestein, George Georgis, and Pedro Pinto. Thank you all for your participation and willingness to launch this event. I want to thank also Nikki and Carolina from CISI, and of course, I want to thank CISI London and our fellow members in Cyprus, the CISI National Advisory Council and members, for helping us in having this live discussion. The live discussion will be available through CISI website, and of course the questions can be sent to each and everyone interested on their email.